Market news now. Asian stocks turned lower and the dollar regained some of its footing this morning as disappointing earnings from the U.S. tech giants undermined sentiment ahead of a key U.S. non-farm payrolls report. Disappointment over earnings from results such as Google, Apple and Amazon did temper sentiment. Locally, Impala Platinum's output of refined platinum group metals fell 9% year on year in the second half of 2022 as power cuts and a furnace rebuild hit smelter operations. Impala, which has operations in South Africa, Zimbabwe and Canada, will release its interim results on March the 2nd. Yesterday, the miner's bigger rival, Anglo American Platinum, reported a 25% decline in refined PGM output last year, blaming delays to the rebuild of its Polokwane smelter, power outages and lower mine output grades. However, to talk to us about the market dynamics and also look back at the week that was, we are joined by Warwick Lucas from Galileo Securities. Warwick, thank you so much for your time. I mean, let's have a look at market sentiment. And I think we saw running from that high following the Fed announcement, which we were expecting, but also some of the nuances that the market picked up from the Fed Chair Jerome Powell.
Yeah, I think that the market actually started quite positively, equity markets that is, in January. And I mean, they showed signs of persisting, but there's certainly a lot of areas in which things look quite tough. And I mean, some of that is obviously in the likes of the earnings that we're seeing in our mining producers. It's a combination both of Eskom issues and, of course, the terrible demand situation that we had from China. And that, of course, is going to have to work its way through until you effectively have a new half that's basically outside of such conditions.
So on that, then, let's look at some of the themes that played out this week that caught your attention.
Yeah, so I think the standout news really was the state of emergency to be announced in relation to the energy crisis. And I mean, that effectively is going to entail then the suspending of certain rules and procedures, I guess, in order to facilitate or fast track new energy. And I guess the issue that's going to come to the fore here is that we don't want to see a replay of what happened during COVID. You want to be sure that bad rules are put aside and that good rules are at least in some measure worked with or remembered and continue to be upheld, at least in spirit. I think the other issue was with Kumba's Iron's earnings. I mean, sales down 35% because Transnet could not deliver. And I think it reminds us that there is yet another state-owned enterprise there that we can't allow to be forgotten in the background while we're struggling with electricity.
Right. Let's talk about that struggle for electricity, because that came out as the main theme, especially when we look at some of the past trading updates for at least the past couple of weeks. What does that do for, as an investor? Do you look past the noise of this whole, the impact of the electricity in the short to medium term and say, well, I'm going to have a long-term outlook, assuming that it will be a little bit of margin pressure, but a lot of these companies, I just need to, I guess, be calm and hold out a little bit longer. How do you play that, especially for SA Inc. stocks that can't help but deal with load shedding?
Okay, so that can be a bit of a variable one. I mean, your main sufferers in terms of power shortages are agriculture, manufacturing and mining. And particularly in the case of mining, I mean, we've seen an expectation for something like 150 billion rands capex in the next 5 years, almost all of it in relation to basically creating own generation capacity. Now that obviously means that's 150 billion that can't be invested in new mining capacity. Because they're very big users, I mean, for them not to be able to get reliable power from Eskom is frankly a bit of a disaster. So it's going to reshift their cost base quite a lot higher. So in investing in these, you're basically going to look at a heck of a long out profile to decide what the investing case looks like. And obviously then that's going to vary from case to case. But certainly for the likes of refineries, I mean, which are very energy intensive, it's quite an unpleasant constraint.
Let's take things stateside. U.S. earnings season for you thus far, especially when you look at some of the guidance that has come out from a lot of the companies that have reported.
The U.S. bull market of 2015 to 2021 was really very much driven by the tech component of the indices. In fact, you could say all of it. So now, since we've had the likes of Apple, Amazon, Alphabet all guiding bearishly, it highlights that something that was really forgotten during the big COVID tech boom, namely the tech stocks are in fact economically very sensitive. The exposure to e-commerce, to cloud, and to digital advertising is actually very much exposed to the economic cycle. And we're now seeing that coming through with this kind of guidance. So certainly it means that we're going to need to see some sort of sense coming from those tech stocks that as the economy turns, so they too can recover.
Going into next week, any company news or announcements or even events that you're going to be paying attention to?
So at this stage, I'm just going to be interested to see what these U.S. jobs reports that look like are come out later today. I mean, jobless claims were actually quite limited, which is a sign of strength. But obviously the gain of 185,000 jobs, which is muted for today. It remains realistic, but it's obviously quite a lot less than the 500,000 that we saw a year ago. Let's see.
Warwick, let's see. Indeed. Thank you so much for your time. That is Warwick Lucas from Galileo Securities. And of course, next week, we're going to be paying attention to China's PPI figures as well as Japan. And not forgetting some of the U.S. Fed presidents coming out with a whole host of speeches throughout the week. So we'll be picking up any nuances in terms of what we can expect from the Fed from March onward. Can we expect a rating pause, and what will that look like? But we'll keep you updated on all of those. We're going to take a quick break. When we come back, SME On Point is up next.